It's time for your Low Country real estate market update. It's the Brian Beatty Real Estate Show. Brian is one of the top 1% real estate agents in Charleston. Find him online at listingsincharleston.com. That's listingsincharleston.com. Or call him at 843-345-1273. Now, broadcasting from the WTMA studios, here's your host, Brian Beatty.
Good morning. You're listening to the Brian Beatty Real Estate Show here on the Big Talker 1250 WTMA. Thanks for joining me this morning. I've been on the radio here for the better part of a year talking all things real estate here in the Low Country. We take national, regional, and local news and kind of boil it down to how it affects you so that you can make some informed real estate-based decisions. In the studio with me today, we are doing a live broadcast with Andrew Muller of Mappus Insurance and Bill Sandvig of Movement Mortgage. So we want to take your calls this morning. We're going to run through our kind of regularly segmented show, but we want to talk to you. So feel free to give us a call at any point over the next hour. The phone number here is 843-556-1250. If at any point we say something that kind of strikes a chord and you'd like to have more specific information on it, or if you'd like to talk with me personally, again, I am a real estate agent during the week. I can be reached at 843-345-1273, or probably easier to remember is my website, www.listingsincharleston.com. Thanks a lot for joining me this morning, guys.
Thanks for having us.
Yeah, Brian, thank you for having us.
So what I wanted to get into, assuming that we don't get any calls immediately here, is just a quick recap of the previous show. I talked about how we ended up in 2013, which was with pricing up about 12% across the board nationwide. I read off some stats for Charleston, Berkeley, and Dorchester County, all of which had positive numbers, both in terms of pricing gains, sales gains, and inventory reductions. And then we talked about moving forward into 2014. The Case-Shiller Index says that we are expected to see about a 6.8% increase in pricing. Again, that's nationwide. And I think that we'll be pretty close to that in Charleston, although I do see some hurdles to our growth in 2014. And I wanted to talk about that first. Again, if you have any real estate questions, give us a call, 556-1250. You've got a real estate guy, a mortgage guy, and an insurance guy. So we can cover just about everything with the exception to your legal and tax questions. All right, let me get into the jobs report, because the jobs report for December was not a great one. And say what you want about housing prices, interest rates, foreclosures, so on and so forth, but housing is driven by jobs, plain and simple, and that's all it is. Earlier this week, we had a weak jobs report, and it was weak on three different fronts, I think, and I want to talk about that for a moment. The first front that I believe it was weak on was the job participation rate. We've been looking at unemployment dip slowly downward from several years ago where it was 10, 11, 12%. I think now we're in the mid-sixes. But with regard to the job participation rate, this is what I'm concerned about. The fewer people participating in the job market, the fewer people there are that are getting the job, which means the fewer people there are to save up money for a down payment so that they can purchase a new home. And that's just the plain and simple of it. But I think worse than that, which is segment 2, is wage growth. If you look at wage growth in the job report that came out in December, and when we talk about the move-up market, people that want to sell their home and move into a larger one, or just really afford their current mortgage, wage growth came in at 1.8% in 2013. And that's less than inflation. So basically, no adjusted wage growth in 2013, and that really affects our market. They may have equity in their current home, which, kind of seems to be a new concept. I'll tell you, it's really nice to be able to sit down with people and do a consultation on their house and say, hey, you've got equity. Whereas 2006 to 2011, some parts of 2012, and of course it's all situational, but you sit down with them and you say, I'm sorry, but we have to really come up with a game plan here, whether it be short sale or what have you. But wage growth was key. And, when you look at moving up into a home with more square footage, you sell your home, you take the equity from that, you buy a new home. yes, the equity plays a big part in it, but you have to have a wage increase to be able to afford that larger home. If you need more bedrooms, you need more square footage, your family is growing. Wage growth plays a huge part in that. And then, I would say that's why the first-time home buyers are being kind of left out of this housing market. They account for almost 40% of our market. I think the statistic based on the 2013 National Association of Realtors profile of home buyers and sellers, that's a mouthful, is 38%. So that kind of leads me into my third category, which is millennials. And they're the first-time home buyers. And, they're young, active, getting into the job market. They're starting to make some money, be self-supportive, and they can't get into home ownership. And every study we look at says that millennials want to be homeowners, but they can't. Why? Because millennial employment is very low compared to the rest of the job market. 25% of millennials are unemployed. And, once we get working on that, then I think we'll start to see the increase in first-time home buyers. And Bill, you might be able to comment on this for a moment. I've seen a lot of parents buying homes for kids, cash, taking out an equity line on their property, and then just acting as a bank.
Well, Brian, aside from the issue of employment, millennials or first-time home buyers, they have an issue with savings.
Right.
They're just getting into the job market. They don't have a lot of exposable income. And so saving for a down payment of a house seems like this huge task that they can't even begin to think about undertaking. So in today's lending environment, the requirements for documenting a loan are well talked about. We know the requirements are stricter and tighter than they've ever been. Mm-hmm. Not that banks aren't lending, but you got to make sure that you've got a plan. So that comes down to income, which we've addressed. A quarter of them aren't working, and the other one is documenting that down payment.
Right.
So parents are overcoming this issue by doing gifts. Gift loans are typically an FHA loan. And that's what you're seeing. People coming in paying cash for a house or saying, okay, how much money do I need to give my child to get them into this house?
Mm-hmm. Gotcha. Again, we're talking all things real estate this morning. We're here in the studio with Andrew Muller of Mappus Insurance and Bill Sandvig of Movement Mortgage. Of course, I'm your host, Brian Beatty. If you have a question, give us a call, 556-1250. And if there's anything we say that you want some, personal advice on after the show, my website, probably the best way to contact me is listingsincharleston.com, or call me 843-345-1273. Or text me and I'll get to you after the show. All right, so let's move past jobs. We're talking about hurdles to growth in 2014. I'll tell you one that I think is very serious, and I think something will be done about this. But as of right now, the Mortgage Forgiveness Debt Relief Act, which I've talked about plenty over the past few weeks, expired December 31st of 2013. And to make it simple, I went to the IRS website, irs.gov, and if you do a search for Mortgage Foreclosure Debt Relief Act, I know it's kind of a mouthful, it will take you right to their page, and it'll explain very clearly what this act is. So let me kind of explain this to you. If you owe a debt to someone else and they cancel or forgive that debt, the canceled amount may be taxable. So back when we started really, flying through the short sales, let's say you owe $300,000 on your house and you sell it for $250,000. That $50,000 was taxable income. So what's worse than losing your job or having a severe medical issue that you can't pay for, and then at the end of the year you get a big tax bill for an extra $50,000 in income? So the Mortgage Debt Relief Act of 2007 generally allows taxpayers to exclude income from the discharge of debt on their principal residence, Debt reduced through mortgage restructuring as well as mortgage debt forgiven in connection with a foreclosure qualifies for the relief. So this provision applies to debt forgiven from 2007 to the end of 2013. So as of right now, that has not been extended, and that's something that I think is going to happen. But as of right now, it has not. So I tell you what, we're going to go to the phones. We're going to talk with Marianne in North Charleston. She has a question about FHA loans and perhaps some interest rates. Marianne, are you on the line?
Yes, I am.
Good morning.
How are you?
Good, thanks.
I have a quick question. if you have an FHA loan and they're adding that extra interest in, after 5 years, can they take that off if you've been paying the payment on time and so forth?
Brian, I'll take this question.
Okay.
Marianne, thanks for calling in. The FHA and HUD recently changed, what you're talking about is mortgage insurance. And the mortgage insurance rules have recently changed to where mortgage insurance starts, depending on your down payment, it starts on your mortgage and it stays on your mortgage. So if you put the minimum down, mortgage insurance will not go away. It's there for the life of the loan. The minimum amount of time that you can have mortgage insurance is 13 years. So if you put down a larger down payment, it's 13 years that mortgage insurance will stay on your mortgage. The 5-year rule changed early last year.
Okay, when you said it changed, but I mean, if I purchased a house in, say, 3 years ago.
Yes, if you purchased a house 3 years ago, then you still fall under the rules that were in place when you purchased the house. So when you got that loan, those are the rules that apply to you.
So that would be the 5 years, correct?
Well, it's 5 years or when there's 78% equity in your house, whichever one is later.
Okay.
So in other words, Marianne, if you bought your home 3 years ago, you likely got a pretty good deal on it. Do you mind if we ask how much you put down on your house? Just a percentage, not, the dollar amount.
Oh my gosh, I think it was like the bare minimum, I think.
So probably 3.5%.
So if you've been making minimum payments on an FHA loan, then for you to get to 78% equity, typically it will take, without your house appreciating, typically it will take about 11 years before the mortgage insurance will go away. Now, you have an option to get out of that faster. If your house improves in value, you can usually go get an appraisal done. And if the appraisal shows that you have 20% equity in your house, then you can get your mortgage insurance dropped at 5 years. So it's a very good thing to do at that 5-year point, the first time you're eligible to get rid of your mortgage insurance, to call your local real estate agent, find out what the value of your house is, and see if it makes sense to spend money on an appraisal to get rid of that mortgage insurance.
Okay, because it's appraising at $50,000 more than I paid.
Okay, great. Hey, Marianne, speak with John, and he'll get your phone number. I'll give you, obviously no charge here. I'll just tell you what I think your house is worth. I'll take a look at the comps. And if we think we have close to 20% equity, then you might be able to get rid of that mortgage insurance, start saving some money on your payments.
Okay.
All right. So thank you very much for calling in. I appreciate it.
Okay, thank you.
So one last thing I want to talk about as far as hurdles to growth in 2013. Again, we're in here with Andrew Muller of Mappus Insurance Agency, Bill Sandvig of Movement Mortgage, and of course myself, Brian Beatty, your host, is insurance. And we've been talking about this for months and months and months now. Andrew's been on the program several times. And I think what might make sense is, let's just dedicate next segment to flood insurance, because there have been some recent changes. And if you're listening, if you are in a flood zone, if you're considering buying a property in a flood zone, this is your time to call in and ask the expert, because Andrew is he's well versed in it, and he's not just been on my program; he's been across the board. So stay tuned. This is the Brian Beatty Real Estate Show on the Big Talker 1250 WTMA. We'll be right back.
Stay tuned for more of the Brian Beatty Real Estate Show on 1250 WTMA and WTMA.com. WTMA. Now, here's more of the Brian Beatty Real Estate Show on the Big Talker, 1250 WTMA.
Welcome back. You're listening to the Brian Beatty Real Estate Show here on the Big Talker, 1250 WTMA. Thank you for joining us this morning. I'm your host, Brian Beatty. We talk all things real estate here on this program. And in the studio today, we are taking your live calls. I am joined by Andrew Muller of Mappus Insurance Agency and Bill Sandvig of Movement Mortgage. So we want to talk with you this morning. If you have any real estate related questions, mortgage, insurance, sales, you name it, give us a call, see if you can stump the experts. The number here is 556-1250, 843-556-1250. And, if there's something that we say that you'd like to have a personal conversation about, then jot down my number or text me at 843-345-1273. Or you can go to my website, listingsincharleston.com, And there you can search the MLS, take a look at active and sold listings. You can read some testimonials from past clients, and of course, learn a little bit more about my 59-day home sale guarantee. So we left the break talking about the job report that came out in December that was not a very good job report. I related that to housing, and we were talking about some hurdles to growth in 2014. I'd mentioned that the Case-Shiller Index says we're going to have a 6.8% increase in prices across the board this year. And while I agree that I think it's going to be a good year for us, and we certainly saw plenty of growth last year locally, I think that we need to just keep our eye on a few things. And so I wanted to bring this panel in here this morning to talk with us about that. And I left with kind of teasing you about the flood insurance issues that we've talked several times about on this program, and we're going to continue to until there's some real definitive information out there on how this is going to affect you. So I'm going to kind of turn things over to Andrew Muller again with Mappus Insurance Agency so that he can give us a brief overview of the Biggert-Waters Reform Act of 2012 that took place October 1st of last year, and just give you guys an overview of what that is and what that means.
Sure, Brian, thanks. So I'll try to do my best to brief the Biggert-Waters Reform Act. The simplest way to put it is that subsidies on flood insurance policies are going away, and they have started going away starting October 1st of last year now. And so what this means for home buyers, sellers, and homeowners is pretty substantial. So the biggest impact is going to be on older homes, what are called pre-firm homes. For Charleston County, those are homes built before 1971. And so what this means is that if a homeowner goes to sell one of these pre-firm homes, and pre-firm, pre-flood insurance program, post-firm is post-flood insurance program, 1971 for Charleston County. If somebody goes to purchase one of these pre-firm homes, they will lose the subsidized rate for their flood insurance, and it can be astronomical. Mm-hmm. Mm-hmm. And so post-firm homes, which were built to compliance to flood insurance standards, those are pretty fine. They're not going to be affected too much. Right. So people with newer homes should not have to worry too much about the flood insurance reform. It's just the older homes when you're going to buy and sell these homes. Right, right.
And I've heard a lot of drastic stories, but you also have some really good success stories, and I want to talk about that in just a minute. On the line with us is Mustafa from Hollywood, and he wants to talk with us about mortgage insurance. Mustafa, are you on the line?
Good morning, Brian.
Good morning.
Brian, I got a condominium in Columbia. I still owe $453 on it, about to pay it off. Is that mortgage insurance, can I get that back?
Bill, that's a question for you. I don't think so, but...
You don't think so?
Mortgage insurance is non-refundable? It is non-refundable, just like a insurance premium would be for your health or your life. Mortgage insurance is non-refundable fee. So unfortunately, the news here is that when you pay off that loan, that mortgage insurance is not going to come back your way.
All right. Thank you. I appreciate that, sir.
All right. Thanks for calling in. Again, we're in the studio taking calls this morning until 9 o'clock. With me is Andrew Muller of Mappus Insurance Agency and Bill Sandvig of Movement Mortgage. I'm your host, Brian Beatty. Give us a call. You want to talk real estate, 556-1250, 843-556-1250. So, Andrew, going back to what we were talking about flood insurance and all the horror stories we've heard lately about someone's insurance going from $3,000 a year for flood to $30,000 a year. I would think at this point in time that most people know what we're talking about. But I want people to know out there that it's not all doom and gloom. I mean, there have been plenty of stories where you worked with the homeowner or with the buyer, and you actually got a reduction in their flood insurance. How about that? Why haven't we heard about that? Tell us a success story.
Absolutely. So again, these increases are occurring to pre-firm homes, and a lot of these pre-firm homes, these policies have been in place for a long time, and so people just think that that's what they should have been paying. But pre-firm homes can qualify for these lower post-firm rates and meet today's flood insurance regulations and standards. And so what one of the success stories that we had was a home downtown that was built in the 1800s. Mm-hmm. And I took a look at it and I said, this home is sitting up on a crawl space. It has openings underneath of it. And I told the homeowner, let's get an elevation certificate done and let's see how this might impact your flood premiums. They were paying a little over $2,500 just for flood insurance. And sure enough, we got the elevation certificate done. They met today's standards, and we were able to get their flood insurance premium reduced down to under $500.
That's awesome.
So it cost him $325 to get an elevation certificate done, and now he'll save over $2,000 a year on flood insurance alone.
Right. And I think the lesson here, and I've been talking about this again for several months now, really ever since, I guess I would say June or July. The first thing you need to do is just call your insurance agent. And if you don't have an insurance agent you trust here locally, give Andrew a call. Andrew, what's your phone number?
Sure. 763-4200. And we can also be reached at mappisinsurance.com. And Mappis is Mappus.
Got it. So first thing you need to do is just call your insurance agent. And again, I'm not turning a blind eye to the fact that there are people out there that have had astronomical increases in their flood insurance rates. I am well aware of it. I've had plenty of sellers talk with me recently about deals falling through because they just couldn't get a handle on flood insurance. And this Bigger Waters Reform Act of 2012, which took place in October of 2013, for the past few weeks now, we've been hoping that in the Senate, we've been trying to pass a vote to delay the effects of this act. So, Andrew, can you talk about that for a few minutes?
Sure. So up in Washington, D.C., the Senate is there are people in the Senate trying to delay this Flood Insurance Reform Act, which I think we all agree is something that needs to happen because of the severe impact that it's having on a lot of homeowners and buyers and sellers of real estate. So this past week, there was supposed to be a vote, but it actually got delayed. And so now the vote is supposed to take place next week up in the Senate. But I'm very skeptical of this actually getting delayed, just because there are a lot of people in the Senate that just want to get the federal government out of the flood insurance program.
Right.
But, which I agree with, but it needs to happen over a certain time period. You can't just flip a switch and make it happen at once.
Right. Yeah, I agree that we need to do what we can to kind of reduce their footprint on the market. But to have a jump of tens of thousands of dollars in flood insurance, which they didn't account for. I think that when they were putting the Reform Act together, they were anticipating a few hundred, maybe a few $1,000s in some cases. But, the purpose for delaying all of this, doing an affordability study and then adjusting the act accordingly, is to make sure that we're not putting people out of their houses. To go from a few grand to tens of thousands of dollars, people can't afford that.
I've got a question for you, Andrew.
Sure.
I've done loans where I've actually had the flood policy transferred or from the current homeowner to the new homeowner. Is that going to be out of the question?
Sure. That's a great question because you can still transfer policies over, but now you cannot no longer transfer those rates. So there really is no benefit of actually transferring the policy anymore.
Do you have to get a new elevation certificate when that happens?
Yes. For all new policies, you have to have an elevation certificate if you want flood insurance through the National Flood Insurance Program. Yes.
So let me clarify. You can get the policy transferred if they have an existing elevation certificate. You don't have to get a new one. You just have to have a elevation certificate.
Correct.
Okay.
There should be if your home was built after the flood insurance program came into effect for your county, and again, Charleston's 1971, there should be a flood elevation certificate somewhere. It could have gotten lost over the years. A lot of newer homes, especially, you have to have it. And typically, the county of Charleston or the city of Charleston, whatever county you live in, has it on file. So before you do go out and purchase a new elevation certificate and you can't find one for your home or a home you want to purchase, then call the county and see if they have it on file. It might save you $325.
Okay, great. I think we have a caller coming in, Dwayne from Somerville. And Dwayne, we're going to take a break here in about a minute or so. But I'll tell you what, let's get you on the line real quick, and we'll just get your basic question. We'll take a little time to think about it, and we'll give you a really good answer when we come back. So, Dwayne, are you on the line? No? Okay. All right, well, you're listening to the Brian Beatty Real Estate Show. Hopefully he gives us a ring back after the break, but we're taking your calls live this morning, 843-556-1250. I am in the studio with Andrew Muller of Mappus Insurance Agency and Bill Sandvig of Movement Mortgage. So give us a call. You're listening to the Brian Beatty Real Estate Show on the Big Talker, 1250 WTMA.
Have a real estate question? Ask Brian Beatty. Send him an email, lowcountryhomesales@gmail.com. That's lowcountryhomesales@gmail.com.
The Big Talker, WTMA.
You're listening to the Brian Beatty Real Estate Show on the Big Talker, 1250 WTMA and WTMA.com.
Welcome back. You're listening to the Brian Beatty Real Estate Show here on the Big Talker 1250 WTMA. We are in the studio this morning taking your real estate calls. The number to call here is 843-556-1250. I am your host, Brian Beatty. I'm a real estate agent here locally that spent some time with you over the weekend talking all things real estate here in the Low Country. I am joined this morning by Andrew Muller of Mappus Insurance Agency. We're talking insurance questions with him. And Bill Sandvig of Movement Mortgage, he's already answered a few lending-based questions. And I think right now we actually have a caller on the line, Dwayne from Somerville, and he wants to talk with us about flood insurance. Dwayne, you there?
Yes.
Good morning.
Thank you.
How can we help you today?
On the flood insurance, when you're talking about the rates, does that, if my house is flooded and it's totally destroyed, does that include the total estimated value of it to rebuild it? Or is there a cap?
Well, coverage, the maximum amount of coverage you can receive is $250,000 through the National Flood Insurance Program. So you would have up to $250,000 for reconstruction costs. Is that what you're asking?
Yes. So
Assume
if your house is $500,000 and
Sure.
it gets flooded,
Sure.
then you're still out $250,000.
Well, don't look at it as if it would be a total loss, like a house fire. If you have $250,000 in flood insurance coverage, you can buy excess coverage to meet your $500,000 full replacement cost. You can do that, but you also have to think about if there was a flood, it might only flood a few feet of the home and only damage a little portion of the bottom part of the home. So $250,000 could probably pay to replace the damaged portion of the house.
Does that answer your question, Dwayne?
Yes.
Okay, great. Anything else
Thank
we
you.
can help with? I guess not. All right, so again, we're taking your calls live here this morning, 843-556-1250. This is the Brian Beatty Real Estate Program. If there's anything that I say that you'd like more information on, or if these guys strike a chord with you, feel free to visit my website, www.listingsincharleston.com, or call or text me at 843-345-1273. Again, I am a top real estate agent in the market during the week, and am thankful to be with you over the weekend talking all things real estate here in the Low Country. So, Bill, I wanted to go over to you and get a market update. We've had quite a few changes over the past few weeks in the lending market, some exciting things, some not so exciting things. So I guess just start off with a brief kind of overview of where the market is right now.
Well, the question I get most often every week and every day is, what are interest rates? So obviously it's been well documented over the last year, starting about midpoint of last summer, rates started to move up, and they've been moving up quite a bit. Had a little bit of a change in that trend last week with the poor jobs report. Mm-hmm. Unfortunately, or fortunately, when the bad economic news comes out, that's good news for interest rates. So last week we actually saw about 0.25% improvement in government loans, FHA or VA loans, and about 0.1% improvement in conventional loans. But what we've seen for the last 7, 8 months, is when good news comes out, rates get worse. I'm sorry, rates get worse. But when bad news comes out, they get just a little bit better. So it's trending up, and it's going to continue to trend up. The more positive economic news, as people get more confident in our economic situation, as housing prices continue to improve, people are getting back into the housing market, we're going to see this continue.
Right. And it's interesting when you think about interest rates in general, and let's go back to when they were at 3.5%. Although, 3.5% interest, who doesn't love a 3.5% interest rate? But if you think about it for a second, we don't necessarily, as a market, want a 3.5% interest rate, because that means, what does that mean, Bill?
I mean, that's exactly right. We were at a 3.5% or even lower than a 3.5%. I remember doing a government loan at 2.875 fixed for 30 years. I mean, that's below the average price of inflation historically. That makes it free money. Your house is free money. We don't want to be there again. We were there because we were in dire straits. The housing market was in terrible shape. The economy wasn't in good shape. And we had to force those rates down. This was a stimulus program to get those rates that low. We don't want to have to be there. We don't want a stimulus plan. We want healthy growth. We want healthy growth in our housing market, healthy growth in our investment markets. And that means a stable, steady interest rate higher than what we're used to.
Right. Let me ask you just a general knowledge question here. And I get this all the time. And I think it's helpful for listeners to really understand this, because if you're buying a home or selling a home, there is a difference between a pre-qualification and a pre-approval when you're going to get a loan. And you need to know what those differences are, because if you're a seller, you want to make sure that the person you're entering into an agreement with can get financing. And of course, if you're a buyer, you don't want to go, deeper into the rabbit hole, start to pay for an inspection, pay for an appraisal, pay for a credit report fee, so on and so forth, get emotionally attached to a house, and then find out that you can't get financing. So tell us a little bit about the difference between a pre-qual versus a pre-approval. And then there's something very interesting that Movement Mortgage does. Tell us what that is.
Certainly. So pre-qualification is basically an opinion. A customer has had a conversation with a lender, and they've decided that my opinion is that this person could buy a home. That isn't really worth very much, especially in this lending environment. A pre-qualification means that an application has been entered, a pre-approval. An application has been entered, documents have been collected, and a computer-based decision has been made on this person. It's a little bit better. But what Movement Mortgage does that's different is we take it a step further. A third level of qualification, if you will, is to actually have a commitment. So a commitment from an underwriter, where a file has been taken and transmitted to an underwriter to have those documents reviewed and for a decision to be rendered on that application, that is when you have a borrower. What's special about what Movement Mortgage does is we've taken that process to get that potential buyer to a commitment, where from the time that we have a loan application, 6 business hours later, that file has been to an underwriter to have a decision. That means if you're a buyer and you want to go out and look at houses with Brian on Saturday, we get you in, we get a decision, and you've got a list of conditions to close your loan. You have a commitment letter in your hand, knowing that you can go out and buy that house. It happens fast, it happens early, because the worst thing that can happen in a real estate transaction is for you to think that you have a qualified buyer. You put sellers planning to move, you've got buyers planning to move, you've got money being spent, and to have that fall apart and wait for 2 weeks, 3 weeks for a commitment letter, that can be very painful and very expensive.
Right. And I think that there's a big trend in our market that's just moving away from the 30 to 45 day close that some of the bigger banks that's what they're going to stick with, because they've got a lot of process to get through and a lot of people that are involved in it. And that makes me think, next segment, I want to talk about kind of preventing contracts from falling through, some of the due diligence you can do up front to make sure that you're not put in those positions. So we're going to talk about that next. Again, in the studio with me is Andrew Muller of Mappus Insurance Agency and Bill Sandvig of Movement Mortgage, and we're taking your calls. So we're about to take a break here in just a minute. Feel free to give us a call. Ask us a question, real estate, finance, insurance related. The number here, 843 843-556-1250, 843-556-1250. And again, I'm your host, Brian Beatty. Reach me on my website, www.listingsincharleston.com, where you can search the MLS, view properties for sale, properties I've sold, learn more about my 59-day home sale guarantee. And you're listening to the Brian Beatty Real Estate Show, so stick with us. We'll be right back.
WTMA. Now, the Brian Beatty Real Estate Show continues on Charleston's Big Talker, 1250 WTMA.
Good morning. Thank you for joining us. This is the Brian Beatty Real Estate Show, and we are in the studio taking your calls live this morning. 843-556-1250 is our phone number. If you have anything real estate related that you'd like to ask myself, Andrew Muller of Mappus Insurance Agency, or Bill Sandvig of Movement Mortgage, please get in touch with us, 843-556-1250. And, of course, I'm your host, Brian Beatty. If there's anything that we say that you'd like more private information on, you'd like to speak with me about your situation, please go to my website, www.listingsincharleston.com. You can search the MLS, take a look at properties I've sold recently, view some testimonials, and, of course, learn more about my 59-day home sale guarantee. Again, that website, www.listingsincharleston.com, or call or text me at 843-345-1273. Andrew, I wanted to get into something with you that we did not talk about a little earlier on in the show when we were given our insurance update, and that's the private market for insurance. So talk with us a little bit about that and what that could mean for homeowners here in the Low Country.
Sure. I mean, this is very, very exciting. And we thought that a private market would come into the flood insurance scenario. We just didn't think it was going to come this quick. But some companies have stepped up to the table and said, we think that we can provide a quality product comparable to the National Flood Insurance Program at a lot better rates. But it's not going to be better rates for everyone. So a lot of people will still find that their rates are better in the National Flood Insurance Program. However, when you look at certain properties, the ones that are going from $5,000 to $25,000 or even higher, this is where the private market is going to suit you. And this is if you're trying to sell a home and you got a quote saying that your flood insurance for the new buyer was going to skyrocket, this private market will help you sell your home and make it a lot more attractive.
So you hear that? If you have a question for Andrew, I mean, this is a very big deal for a lot of people. We've had some big stories about insurance prices going from a few grand to tens of thousands of dollars. So call us up, 843-556-1250. That's the studio number, and we'll answer your questions live here on the air.
And Brian, just as a success story for this private market, there was a homeowner here locally in a V zone, a velocity zone, the highest flood zone you can be in, or the worst flood zone you can be in. They have a pre-firm home, so built before 71, and their flood insurance premiums were around $3,500. They were going to sell their house. The new buyer was going to have to pay $27,000 for flood insurance. They walked away. Nobody has wanted to touch this house, and so they actually took it off the market. Well, since this private flood insurance market has come into play, they have since put their house back on the market because now the max that the flood insurance will cost is about $9,000. Now, $9,000 is a lot of money. But it's certainly not $27,000. But it's now bringing this home back into the market to possibly be sold. So
right, it's an option, and we're seeing a lot of contracts falling through, and as buyers are learning more about the flood insurance issues that we're dealing with, are kind of backing off entirely, at least until we can get some sort of a decision up in Washington, D.C. as to what they're going to do with the Bigger Waters Reform Act, which is what we're talking about. And so that kind of leads me into some of the other reasons why contracts are falling through right now, and it's market and timing specific. Bill, we talked last segment about the difference between a pre-qualification and a pre-approval. And again, this is Bill Sandvig of Movement Mortgage. Questions for him, 843-556-1250. When I see a property fall through due to financing, nobody wins. What advice can you give a buyer to make sure that doesn't happen?
Get approved. get your full application into your loan officer and get approved. Get your file into underwriting. When you know that you're actively hunting for a house, do not wait for the contract to come in to get your file into underwriting. We can get you fully approved. Movement Mortgage, we can do it in the day after you send a file in. We can get you fully approved. You have no questions. Your realtor has no questions. How does this help you? You can forget about the stress of getting all your financial information in and plan about when you're going to turn your power on, when the moving truck's going to come. And your offer is stronger when you're approved, because when you send an offer in with a commitment letter from a lender, the seller knows how this lending market is. They're going to feel confident. If they have two offers that are the same and they see one has an approved borrower and one doesn't, they're going to go with you.
Absolutely. Yeah. When I represent a lot of sellers here in the Charleston area, and when I look at offers, it's amazing the amount of offers I get that they don't even have a pre-qualification letter. I said, hey, where's your pre-approval letter? And they say, well, we should get it from the lender in the next day or two. And of course, it's my fiduciary responsibility to present that offer to the seller with a caveat, of course, that says, hey, I don't know anything about the financial wherewithal about this buyer. So I routinely have them call Bill over at Movement Mortgage because he can give them an answer in a few hours. And that helps us. I certainly don't want to put a seller or any client in a position where we get them excited about home ownership. We get them invested into the process of home ownership, which is costly. Inspections a few $100, appraisals a few $100, CO100's a few $100 in some instances. So anything that I can do to save a client time, money, and stress, of course, is time well spent, and it's what you're hiring your real estate agent for. Go ahead.
I mean, I've heard stories where, take it a step further, on the seller's side, they are starting to do repairs to their house. They're starting to make changes to their house for this buyer that doesn't have a commitment letter yet. They're still, their file is still in hold somewhere in processing.
Right.
Talk about a nightmare.
I had one with a large bank a few months ago, and this buyer, could have paid cash for the property a few times over, financially, sound. And they were buying a condo in downtown Charleston. And we were, I think at this point, 6 weeks into the process. And they sent the buyer a letter saying, I'm sorry, but we have to deny this loan because the makeup of investors to owners in your condo project doesn't fit our guidelines. Which is ridiculous, because the condo questionnaire, which is what these condo projects fill out to give lenders a sense of the makeup of that development, was given to them like the first week, and they just totally dropped the ball. And it's frustrating from a real estate agent's perspective, because of course we're putting our faith in others to get the job done and to protect that client's well-being.
That's simply,
it's just like any other industry.
That simply just shouldn't happen.
Yeah,
I think another sound advice is stay local.
Right.
Stay local. Use local people who know the marketplace, who know the intricacies of Charleston and the Tri-County area. Stay local. Use local experts. In a complicated process, you pull someone in from New York or wherever, you're setting yourself up for failure.
Right. Well, I tell you what, we are getting close to the end of our program here. I want you guys to give your contact information out. Thank you very much for joining me this morning. Andrew, give us your contact info, please.
Sure. Well, we can be reached at 843-763-4200, and our website is www.mappus.insurance.com. And you can go to our blog site, actually, and find out all this flood insurance information. So go there.
Bill Sandvig with Movement Mortgage. I can be reached at 843-300-7870 or www.movementmortgage.com. Home of the 6-hour underwrite, 7-day clear to close.
Thank you very much for listening to the Brian Beatty Real Estate Program here on 1250 WTMA. We will see you next weekend.
Join us for another edition of the Brian Beatty Real Estate Show next Saturday morning from 8 till 9. Contact Brian Beatty online at listingsincharleston.com. That's listingsincharleston.com. Or call him at 843-345-1273. 843-345-1273.